everybody. Good Monday to you. Hi, Ziggy. I like your tweet today. Everyone doing okay? So the dollar's trying to turn. There was some bad data on this terminal on TradingView. That didn't happen. It's like a mistick, but we're starting to round out a little bit here. 1 hour, trying to form a base, diverging a little. I just can't get excited yet. Maybe there's a turnaround Tuesday bounce. Don't believe this is low. So I think it's too late to chase the short side here, and might be too soon to chase the long side. I did do something in metals though, so I just want to cover the metals here. I think that we're getting a capitulation move here, and silver, I think, is turning. So we had another ghost trade here last night. We opened, I don't know how they do this, but silver's notorious for it. Didn't see much trading. By the time I saw trading last night, we were almost unchanged on the day here. Okay. But anyway, sometimes these ghost pips or trades are, kind of like they tell you the market could go there. So right now it looks like we have a little 2 drive going in silver. So, I'm not a big bull, like these guys talking $18. But why not a rally back to 16 bucks before we go to 14.50 or so? So just looking to scalp it, the silver, for a little bit of a play back towards 15.80 to 16 bucks. The gold is also trying to recover here. Let me just show you something here. It's really gotten smashed, and the short-term RSI looks pretty ugly. We confirmed that new low. I don't think we did on the 4. We diverged on the 4, and we diverged on the daily. So, probably not a bad time to probe a little gold. Maybe it could go to 1190, but, we're not getting confirming lows here. Maybe this is 1, 2, 3, and then this is the weekly setup that I'm looking for. Everyone see last week we had an inside week? Give me a Y. You see it? Last week's range was inside the previous week's range. Okay, so the most bullish thing gold could do, the first part of its mission this week was to take out last week's low, make a new low for the move. So what the bulls want to see in gold is sometime this week for it to take out last week's high, which is 1217.89, and close above it, and you'd have a pretty good weekly signal for maybe a retrace back to 1280. I also think Rega has a count like that, and your 2-week off number where you need to close coincidentally is above 1214. So just a little bit of anticipation. I'm not, could also collapse to 1156, but there was a headline on Bloomberg that specs make their biggest bet, negative gold. Who needs gold when you have the stock market and the dollar and bonds? Who needs gold? And, they might be right, but they could be wrong for a few weeks. So, that's what I'm looking for this week. I think that's a possibility. Just want to draw your attention to it. We're all captains of our own ship, correct? Give me a Y if you agree with me that we're all captains of our own ship. So we don't blame anybody. It's our decision. Anytime we click the mouse, no one's clicking mouses for you. All right, even if you're a subscriber. Okay, so we take responsibility for all of our trades. Remember, it's one mistake business. If you don't have any, hey, matey, go swab the deck, Ziggy. Nah, you have your own boat. docked in New York now. You're docked in New York. So that's what I see metals wise. Stock wise, I thought that, maybe last week settled it. We had some pretty negative action, but they're trying to bring it back already. So who knows? Maybe we have to make another march up towards the highs here again, or we get a right shoulder. But this could be a 1, a 2, and we get a 3, and the metals, everything rallies because the dollar's peaking. That relieves some of the pressure. Maybe the lira stabilizes, the yuan sells off, when you pair it US dollar, yuan. So maybe we get one more shot up here in the Dow, S&P, but not make new all-time highs, all right, which is here. But we could still, make an attempt up here for one more high. And if you're looking for the weakness in the stock market, I'd have to say that it's the semiconductors. They may have to call them quarters, some conductors. So just to give you a look at this chart here, it's the SMH. So you'll have the NASDAQ, if it does, it's able to make new highs. But you'll have some sectors like this that aren't going to make new highs. Maybe it fills the gap, something like that. But you look at this semiconductor, which I think is a pretty important group. I'm not a stock guru, but it hasn't made a new high since, when was this? What's the date? Oh yeah, March 12th. So here's one lower high, then last week's reversal week. This looks pretty negative to me. So regardless of what the market does, semis look like the relative weakness. Lots of gapping going on. So I have a great guest. Erdogan says, God looking after him. Okay. I put out a tweet. You know what, Nitish? God only runs one way, towards us. Okay. Anyway, that's what I see early in the week. I advise also keeping some powder dry for turnaround Tuesday. Maybe some of these trends will shift. So the end still looks pretty negative to me. That's it. So those are a few things I see. Trying a dollar yen short up here. Yeah, but my chart is screwed up, Joey, because they had some bad data there. Cable? Yeah, cable, I know that the guys and Stealth, they like it. You would think with the dollar coming off, it's due for some type of bounce. Let me see. I don't see anything. Not yet. Oh, hey guys, look, there's a reminder. Face starts in 1 hour. Huh. Okay, I'm early today. Okay, you're welcome, Martin. I'm going to turn it over to Blake now. Oh, I was talking about our guest. I don't have it together today. He's been spot on bearish euro and gold, even when gold was up around 1360. So looking forward to speaking to Henrik Zeberg. That's his Twitter handle, Henrik Zeberg. So anyone know Henrik? Follow him on Twitter? Yeah, he's a he's one of the bearish guys, most bearish guys I know. So eventually he's looking for euro under parity. But I believe he has some levels that he's looking for what could be a pretty good bear market rally in euro back to 118 or so. Anyway, we'll get clarification on that, okay? He'll be here at the top of the hour. So I'll give you someone who has even a bigger reputation than Henrik. It's my boss, the CEO of ForexAnalytix, the creator. This is his baby, although he has 2 sons. ForexAnalytix, when he first started talking about it to me, when it was going beta, he called it his baby. So how you doing, Dad?
I'm doing all right, Dale. How are you?
Good, buddy. Good, buddy.
So I trust you had a good weekend.
Yeah, you know, I've been getting a little swimming in.
Oh, that's good.
Yeah, so you know, when you have the heat, what else can you do, right, buddy?
It's yeah. How the storms over there?
Uh, really didn't. I don't know if it rained last night, but it's more like firestorm. It's like Lake Elsinore is only about, I don't know, 10 miles away from where I live, 15, and it's still burning. But the weather is moderating a little. Maybe they'll get a handle on it. You're a good prediction on the weather. It did cool off yesterday.
Oh, that's good. Finally,
Yeah,
it's starting to cool off a little bit. Well, as far as the FX market, it's still pretty hot. We've got that was all right. That was bad, but
yeah.
there's been some volatility. Actually, I've got let me take
Okay.
a look.
Yeah, I need to know. I don't have a lot of clarity on the board today. What to do. I find that when I start scanning a lot of different things, Blake, it probably means when you have to search for a trade, it's not good, because most good trades hit you right in the face, don't they?
They do. There's wait, hold on. There's a lot of news coming out right now. U.S. Embassy official in Ankara has not put out a statement regarding U.S. Pastor Brunson. There's been some volatility, and you can see the U.S. dollar Turkish lira has been all over the map.
Oh, wow.
This is a 5-minute chart.
Okay.
There's this statement saying that he's going to be released from house arrest, and that came from China.
I bet they do release him. I mean, it's cheaper than doing anything else except for his pride.
Right.
Right?
Yeah, I mean, look, when Erdogan was, just citing that God's on his side, the market's obviously punished those types of comments because that's the last thing the market wants to hear, but we are seeing some volatility here in the U.S. dollar Turkish lira, and as we and I made a really big mistake. I quoted a previous face webinar when I was tweeting out the webinar information. I meant to tweet. I tweeted the wrong video apparently, but anyway, I was talking about how the Turkish lira is, just rallying, and then it was actually, destroying. The euro was, euro was getting killed and whatnot. But today, will we see a reversal in the lira? I don't know, but there's a lot of volatility. I think we actually have to turn negative on the day for anything to really start to reverse. But we've seen equities rally. And the euro completed its. We completed the triangle extension. So
okay.
You can't be short the euro down here. I mean, I think the euro can eventually move lower, but I don't know if it's the right decision to be short right here. And if you use ForexAnalytix, you have the analysis from last night when we hit 1380. We had completed. It's right here.
Wasn't that Grega's pip too? His target, did he book that short from 116?
I don't know.
Pattern in play.
I'm not really
hard to keep up, huh?
It is active patterns in play. No, he's still bearish.
All right.
He's still looking for 112.
Okay.
But currently, you go. You got to be a little careful because of the, you know, it's moved quite a bit, and you know, if the pastor is released, let's say a pastor is released and he goes on, you know, released from house arrest. I mean, you know, the euro could rally back up towards 114.50, or you know, we could see a much bigger move here. But I think once again, all eyes are on the lira. Well, that's not right. This is, hold on.
There were a lot of ghost ticks on TradingView last night.
Huh?
There were a lot of ghost ticks on TradingView last night. Like there's bad data on the Dixie, and there was a ghost tick in silver, you know, like 20 lower. I never saw a trade there.
Yeah, I mean,
you know how you get those once in a while? They're missed ticks. But
oh yeah.
Yeah.
Yeah, I mean, you get a lot of, I mean, there's a lot of false, you know.
It screws the charts up until they correct it, you know.
Yeah, it really does. So it you know,
that's my big complaint today, buddy.
What's that, Dale?
That's my big complaint today. If your biggest complaint is a bad candle on your platform, things are going pretty good.
Right, yeah. Exactly. So there's been, you know, some volatility here. The euro's getting a little bit of a lift. The stocks are coming down just a bit, but overall, some pretty big volatility that's happening in the lira, and I think that's what's driving price action at the moment. I mean, everybody's got their eyes on the Turkish lira at the moment, and so we should continue to keep our eyes on it. And these moves here, let's go over to the 1 minute chart. You're seeing it, you know, just bounce around. You know, any type of continued rally in the U.S. dollar Turkish lira is going to keep, you know, the euro dollar under pressure. But you know, the euro dollar has kind of stopped going down since last night, and same with the cable. You can see the cable is just kind of, you know, holding up too. And I think that you know, if the U.S. dollar Turkish lira starts to turn lower, I think it's gonna weaken the dollar. You know, it's interesting how all the market's really just kind of focused on really what's happening with the lira at the moment. We also have the U.S. dollar Japanese yen, which is, I know we just spiked up earlier, but right now, you know, the U.S. dollar Japanese yen is trading below this like support zone, and I think this is a pretty key support zone at the moment. Let me see. Sorry, there's a ton of volatility. I really got to pay attention to the lira really quick, because I think this is driving price action at the moment. So and I'm really just kind of focused on, I know it seems crazy, but I'm focused on a 1 minute chart here, because it's really, you know, any down move that we see in the U.S. dollar lira exchange rate is spiking up the euro dollar. So what we can do right now is do this, and let's put the euro here. So watch this inverse relationship. It's really, you know, you can see the euro's kind of spiking up here. If we drop here in the U.S. dollar Turkish lira exchange rate, it's going to spike up the euro dollar. And the euro dollar, like I said, it stopped going down last night. It's not dropping much. Excuse me, really quick. I'm also adjusting my headset. So that's, you know, I'm paying attention to this more because I'm looking for a trade here. Really, this is kind of a important price action for me, because I just bought some cable earlier at 55. I own it at 55, so I want to see the U.S. dollar Turkish lira turn lower, because I really want to buy more of this U.S. dollar or pound U.S. dollar, especially if we spike above the 128 level, because this pound, you can see it's really gotten destroyed. And one of the things that the cable has, the DSI, or the daily sentiment index, is very extreme. It's at 7. So This is and Dale, I don't know if you're around, but did you see some of the daily sentiment index uh, prices?
Records,
Yeah, well,
record
like
low reading.
the cable's been at 2 days in a row. So and I shorted the euro pound last week,
That was a good trade.
yeah, is really good. And I'm still in a short euro pound, but I expect the pound to really, you know, move higher and bounce. But I'm really one to see the lira, the US dollar lira, roll over. And if that happens, then that cable I think is gonna pop. And that's why I'm focused so much on this right now.
It's so overdue.
It might be, and we just have to see the U.S. dollar Turkish lira turn. And I thought this was the beginning of it. And you can see when the U.S. dollar Turkish lira rolled over on that fall, it seems like it's a false report. The market's taking it as such. But as it rolled over, you look what happened with the pound. The pound spiked from 127.58 all the way to 127.82, and it came down as the lira recovered. But if the U.S. dollar Turkish lira does roll over, then I think the cable is set up for a big squeeze.
That's a good idea for all of our members, that they should have a split screen, especially if they're scalping. I bet a lot of people, aren't watching the lira as closely as you are, but the correlation that you just pointed out, you got to watch it.
Well, this is how I have to illustrate it to you guys at home. But I have 2 full monitors that look like this that I'm watching, and and I watch all these different exchange rates, and I'm just trying to give you guys an illustration of what I'm looking at here.
Yeah, Siamese twins, man.
Yeah, they are, and you see a lot of inverse relationships here, and it's what I think is moving the market today, and everybody else is looking at the lira and queuing off of it too. So that's what like I said, I think we got to be watching really carefully. Because if we see another sell-off here in the U.S. dollar Turkish lira, and we start to see it, like really move. This is I didn't want to move that one. If we really see it start to pull back, from the 7 exchange rate, more like down to 650 or so, that's really going to allow for some of these other pairs like the cable or the euro to really start to recover. And that's what I'm hoping for, because I want to see the pound squeeze. I want to see the US dollar Turkish lira reverse, because these are the opportunities that we have to wait for in the summertime when there's nothing else happening. And that's the tricky part of the summer is, making sure that you're around watching the markets that are moving. And right now, these are the markets that are moving. This is what's really moving. This is what's making
where
the
the action is.
ticket. Yeah, totally.
Yeah, we're lucky.
Right,
I mean, normally we wouldn't have these events in the summer. So, I read, our weekly letter, and I think you're right. Don't take a vacation now. I think things are getting wild.
Well, things are moving a bit, and you can see here's the cable starting to tick up as the U.S. dollar lira is moving lower. Again, this is this is what's moving the market at the moment. So you kind of gotta be where the action is, and this is where the action is right now. Now you were talking about gold and silver. Gold and silver do not look good. It's interesting. They have been really just underperforming. They haven't rallied for any particular reason. I do think that you have to start looking for possible reversals here. I think that you have to have your being at the ready for these precious metals to start to turn, because they and what might not necessarily cause the turn, but might be might be part of it is, you know, a turn higher or a turn lower in the dollar. So if you're looking at the cable or you're looking at the euro dollar, by these really starting to strengthen, that weakness in the dollar is gonna feed into precious metal strength, in my opinion. So if you start seeing the cable and the euro hitting new highs on the session, that might be your cue that you got to start paying attention to possibly long gold or long silver.
The DSIs on that, Blake, are down in single digits too, aren't they?
Yeah, let me see if I can pull it up for you. Give me a second. I have it. Just let me get over to it. Let me find the Friday readings here. Give me 1 minute. All right, and let me grab it for you guys so you guys can see where everything was at on Friday. 1 second. Okay, where the hell is it? I think it's behind my Bloomberg page. Oh, it is. No. Where is it? No. Damn it. I'm trying to get it for you guys. It's taking me a bit because I got so many screens. All right, let me move that out of the way. Where is my snip? Where? I can't find my snip. Where? Okay, let me do this. And then, yes. Okay. DSI. Hold on. I don't know why it disappeared, but I'm gonna make it reappear here in 1 second. So just
everything went to zero, and then
yeah. Let's see. Charts. Here, there it is. Okay. No, whoops. It's over. It's on my other screen. I've got it on like 10 screens over here. So here's where you should be looking at like your DSI. You know, look at the euros ripping now. So you got to be really careful, guys.
Yeah.
But look, pound DSI 7. Wait, this is for 8, 9. No. That's the wrong date. Damn it.
Blake, I think Nitish put it on the chat, so you can.
Yeah, I know I posted it on Friday afternoon, so you probably got it from there. So yeah, here it is. I'll just use this because I did post it on Friday afternoon, but you can see here's the pound 7.7, gold and silver pretty low. Dollar index is at 94. So really, you know, very exaggerated.
Yeah, metals too, Blake. I didn't hear metals are down.
14 and 17. Gold is at 14. Silver is at 17. Okay. So
thank you, buddy.
Yeah. So anyway, yeah, pretty extended levels. And come on, let's see this. See this U.S. dollar Turkish lira turn lower here. If it turns lower, that's what's gonna move the needle for the euro and the pound. They're kind of stalling here, but.
Wasn't it exciting to see Tiger with the eye of the tiger again yesterday?
I tell you what, I watched the PGA Championship yesterday, and he looks so good. And I you know, don't want to overshadow Brooks Koepka. He's that guy's an Iceman. He was just guy's on fire. What a great golfer he is. But you know, it's exciting to see Tiger back in the mix. You know, whether you agree with his lifestyle choices or what, you know.
He's a champion. He never gave up. He has that look. He has that look when he hit that made that last birdie. The look that, you know what, I can still do this, and I'm going to win one.
I'm a huge Tiger fan for that reason. You know, he's really a competitor and a fierce competitor, and I'm so happy since he hasn't won a major in 10 years. So it's great for him to see him back in the mix. It makes us think as old people can actually do it too. So
I'm looking for a major here.
Right. Well, here you go. And I'm gonna pass everything over. Is Steve here today? He is
getting ready for his vacation, I think.
Yeah, I don't know if Steve is here. Stelios,
I got it.
Huh?
I got it.
I don't see him. Well, I'm here as well.
Yeah, we're
Don't
here.
see him.
Go ahead.
No, I was wondering if Steve. I thought Steve was supposed to be here this week. I know he was. He's in Naxos. He's in a different island, but
He was traveling yesterday, so he should be here. But if he's not here, we're gonna take over. No problem.
yeah. Well, I don't know if you do you need any help, Stelios?
No, we're good. We're good.
Stelios and I are like Huntley and Brinkley. I know you don't remember them, do you?
I don't.
I don't.
I don't even know what you're talking about, Dale.
Well, they were a news team. You know, unlike Walter. Remember Walter Cronkite?
Of course.
Okay, well they were around the same time.
Oh.
Huntley. How about Roger Siskel and Ebert?
Siskel and Ebert. That would sounds more like.
They're both dead now. Yeah, they're both dead. But yeah, we got it. Yeah,
I guess they are. Huh?
Yeah.
Yeah, I wasn't. I thought Steve was going to be here this week. Maybe he's having internet connections because I haven't heard from him all night actually. Stelios, how about you?
I haven't either. I know he said he's going to be here this week. I know he's in an island, but he's always set up for internet quite well. So if he's not here today, I'm sure he's going to be here tomorrow.
And Naxos, just so you guys know, it's a pretty big island. I actually stopped there like 13 years ago as I was traveling through Greece for my first time, and it was a really nice island. I'm assuming everything's good. Hopefully we hear from him soon. So. Oh
yeah, he's fine. He's probably giving a technical review to Jason and Katerina right now.
Yeah,
going over his charts with them.
Maybe he is. Maybe he is. So, hey, Stelios, so how do you feel about these precious metals? Because they have been just absolutely, and I'll go to the daily chart
unprecious.
Yeah, they've been unprecious. I mean, here's gold, or no, this is silver. I'm sorry. No, this is gold. Gold has absolutely been destroyed here. And we are hitting new trend lows below what I've called the support zone here. So how do you feel about precious metals at this point?
Well, on Friday, when the markets closed and I started writing the weekly newsletter, I thought, the dollar has strengthened a lot, but on Friday, gold and silver actually didn't do too badly. Gold was down 0.2% or something like that. So, I thought, this is a pretty good sign, but clearly today they're catching up. So I think what Dale has been saying for some time now is materializing, and they're gonna flush out some longs underneath 1,200 in gold. And,
they're doing it.
Yeah, and they may take silver below $15. It's very possible. I've been like a broken record. My view in the medium term is constructive. Now, short term, you have a lot of things affecting precious metals. You have real rates, you have the dollar. Dollar strength will always bring short-term pressure to precious metals. But when you have an instrument like gold, for example, what's driving its price? The price is supply and demand, and also if it's denominated in a certain currency, it's that currency as well will drive its price. Now, supply and demand in gold, theoretically, has not really moved materially. It has some use in jewelry, has some use in industry as well, not as much as silver. It's a good, very good conductor and all that. But overall, supply and demand, you can't say it's really changed. People hoard it, and central banks hoard it as well, and it's used in periods of crisis. Like now, for example, Turkey has said, they're going to use some of their FX reserves and their gold reserves. So it's something that theoretically holds its value. Supply and demand is fixed. So what else is there for the medium-term view? Forget about the short-term view where real rates go up and down. And yes, gold and silver don't have an interest to pay compared to bonds or stocks who pay dividends. Forget about the little things that will drive the short-term price. I think the medium-term price is driven by a huge amount by the quantity of money and credit in the economy and in the world. And if you have a country like the US, generating $1 trillion deficit every year, and every major Western country is doing the same pretty much, I don't see how in the medium term gold and silver could remain low. Then again, in the medium term, we're all dead. Who said that? I can't remember, but that's true. In the long term, we're all dead. So it's very frustrating seeing metals under pressure, because I'm a bull. I have my long silver position, which is now underwater, my 4th or 5th position in the last few years. I'm still holding it. You know, I'm not going to panic. I'm not. If anything, at $14, I'm going to buy more. So it's frustrating for me, because I am constructive in the medium term for precious metals, but I can understand how they're under pressure now. You know, I totally get it.
Okay,
So,
well, you know, they are a little pressure. I've long thought that gold's going to head down towards, you know, this 1172 level. I think it's real big, because it's here, just to give you a bigger view of gold, of what I think is happening here, is that this is the 618 retracement of this from the lows, right? You know, it's a big, and like, let's imagine that this is a longer term inverted head and shoulder pattern. I know it's, you know, you have to kind of use your imagination here, but
it will be.
If we end up, you know, holding this 1170 level, you know, we might develop like a right shoulder here on a big inverted head and shoulder pattern. But the 1170 level also represents this 78% retracement of this big move here, and 161% extension of this last move. You know, really kind of comes in just below it, but I think that we're going to see a lot of support down there. So we might have another, you know, another couple of days of precious metals weakness, which wouldn't surprise me, considering the dollar strength that we've seen. I mean, because the dollar has been obviously extremely buoyant, you know, in recent weeks. So anyway, that's kind of what I'm thinking with gold. Now, we also have the cable that's trying to find some sort of support here, and I know that that you, Stelios, you like the cable, and I'm sorry, I'm putting it back on the lira over here, because I'm obviously keeping a very close eye on what's happening with the lira. But over here on the right hand side, you can see here's the cable. Cable's just gotten absolutely torched as of late. I do think that the pound is trying to find some sort of base support down at these prices. How do you feel about the cable down here?
yeah, I mean, I've said this before. I am constructive on the pound as well. Maybe not necessarily against the dollar just yet. You know, I've had been talking about this for the past few weeks, and I had in my mind a level around 128, 28.5 to start getting long cable. I didn't, because of the sheer velocity that it went through it. So, you know, I just said, I'm going to leave this for now, see where it settles. And if, you know, if it goes back above 128, I'm going to start getting interested. So for cable, you know, my medium-term view is that, yes, I think sterling is going to appreciate for a few reasons, which I've said this in, I've described here in the webinar in the past. You know, one of the things is what's been priced by the market for sterling, for the UK in general. And I still do believe that there will be some kind of an agreement between the UK and the EU. And that's my main thesis, you know, and that's why I'm constructive on sterling. Now, as I said before, not necessarily against the dollar right now, but I would, you know, I would love to see euro pound go back towards 90 to sell it there. I must admit, I didn't pull the trigger last time it was there, because it was there for only a little bit last week. So I would much prefer euro pound short, or, as I've said before, sterling kiwi long, which is performing a little bit in the past week after the very dovish RBNZ. And I really think that sterling kiwi can go well above 2 in a very short period of time. You know, it's not by accident that we all call it the Kraken. You know, this thing moves. So, you know, and for people who haven't caught that, the RBNZ last week were very dovish. You know, they said that they held rates, and they said that to hike rates, they'll need to wait at least 2 years. And they also left the door open for cuts in case Q3 GDP doesn't grow. So they've actually given us a nice guideline, forward guidance in terms of what they're going to do in the very short term. And I must admit, when I saw the comments, I thought this is very dovish. And the Kiwi moved the same day, but then it's kind of stalled and pulled back a little bit. And so I really think the Kiwi has quite a bit of downside left.
I do as well. And in looking at the pound New Zealand, one of the things I love most about the price action here is how it stopped out below this dotted line. It stopped out a lot of longs, just ahead of the RBNZ. Post RBNZ, it rallied back. We get above this 195.50, and it could be a pretty bullish event. And I look at not only the pound New Zealand, I'm thinking the same thing with the Aussie New Zealand. As many people know, I'm very, very bullish longer term with the Aussie New Zealand. And I think if this one cracks above 112, pound New Zealand, could quite possibly break out as well. And I'm like you, I think the cable is better played against some cross rates. I am short the euro pound, even though I am long the pound dollar right now. I don't know how long I'm going to stay long the pound dollar. It has more to do with what happens with the lira today is more important to me. What I do with the dollar, because I believe if the US dollar Turkish lira turns lower, that means the dollar is going to turn lower against the cable and the euro and everything else. But I think the pound looks quite constructive against other currencies. The pound New Zealand is a good example. The euro pound had a great rejection of resistance up here, and we slam into the channel. I think if we get below 89 and definitely below 88.50 on the euro pound, the pound dollar is going to look a lot better against some of these other cross rates, in my opinion.
Yeah, I agree. Actually, those daily candles on the pound Kiwi, that was brutal. It looked, I couldn't see very well because I'm on my laptop, but it looked like a tweezer bottom, right? The sterling Kiwi. I mean, that was brutal, like you said, just before. Maybe not. I can't see very well.
Yeah, it wasn't but it really it stopped everybody out ahead of the pound, ahead of the RBNZ, and then reversed. Which this type of price action right here. This is what gets me excited, because I know it leveled the positioning of this particular pair. So you had everybody who was long was trying to probably build longs right through here. Right through here, they're trying to build longs, and then they got stopped out, and then they had to reverse and start, and reestablish their positions. Then you're going to have people that start chasing it, like myself, if it starts to break above 195.50. And so that's like, this is a really good, this move right here that you see circled. This is a perfect setup for me for reversals, which, I'm not long, but I'm definitely keeping my eye on it now, because and it's how you decide to play the pound. I mean, I'm already short pretty aggressive euro pound from Friday, so it's like, dude, am I going to be adding more cable longs, already knowing that I've got that big position on already, or would I rather just be careful with my position? But I still think the setup is really there. So what else, Stelios, do you have your eyes on this week? And as you were writing out your macro stuff over the weekend, what other setups and what else are you thinking?
Well, the data-wise this week, the important thing is we have UK CPI and average earnings, which is, as we've said before, one of the main things that the Bank of England look at. And whenever this gap widens either way, they're very quick to point it out. At the moment, we have CPI and earnings at 2.5%, I think. So they're actually flat to each other. So there's no real gain or loss. But we have to remember that they're still above 2%. They have been above 2% for some time now. And this will keep the pressure on the Bank of England. I know they've been a little bit dovish, and Carney, every chance he gets, he remains dovish. But at some point, they will have to, they will have to continue doing what they need to do to fulfill their mandate. And especially if, or hopefully when there is an agreement between the UK and the EU in terms of, even a basic agreement, and all this uncertainty gets lifted, then I think that the Bank of England's job is going to be much easier. And something that I can relate to, with this uncertainty in Brexit. I remember when, I'm Greek and I live in Greece, and we had this huge crisis and no one knew what was going to happen. And even though Greece isn't really fixed yet, when things were, when they did the third memorandum and they put things in line with the bank recapitalization and all that, suddenly the uncertainty gets lifted and things start moving again. It doesn't need to be something material that actually has changed, positively. It's just the uncertainty that very well how uncertainty can really spook the markets and currencies in particular. So I think when that happens, we should see a decent move by sterling to the upside. But yeah, so to answer your question, data-wise, we have that. We have some, US data later in the week, like construction and building permits and stuff like that. There's nothing major. We have the Euro CPI as well, which has gone above 2%, so it's a 2.1%. So that's another well, the Eurozone inflation is also at target. US core PCE is at target as well as 1.9%. UK inflation is above 2%. We're seeing inflation growing, globally, and that's
And how problematic is that going to be for central banks? I mean, when you start to see inflation, the inflation rise globally. I mean, and you got all these central banks that have been really, you could argue, behind the curve.
Yes. Well, yeah, that's a good point. And we will have to see rates going up if central banks are going to do what they are supposed to do and fight inflation. Now, we all know that central banks, they have kind of moved the goalposts a little bit in the past few years, whereby they're looking at all sorts of other things. They look at equity markets, they look at currencies, they look at everything, and they are less, how should I put it, less direct in moving rates to counter inflation either way. So I think, countries like the UK, when the uncertainty gets lifted, and the Fed as well, and possibly Eurozone as well, with inflation above target, they have to start tightening. And that's one of the reasons why I think global yields will continue to rise.
Right. And so if yields continue to rise globally, we should, see that really weigh a little bit on the dollar. I mean, that because the dollar has already been, fed the narrative of higher rates here in the U.S., where everywhere else, you got a little bit of catch up, which
yes.
could argue a stronger euro, stronger pound, or who knows about the Antipodean type of countries like Australia and New Zealand, but at least the European countries might start to be a little bit more hawkish in their rhetoric. Now, are you thinking anything with in regards to NAFTA regarding like the Canadian or the peso, because both of them have actually had really nice bounces off of the lows?
Yeah, it's an interesting thing. Again, Trump and his government, they're a little bit unpredictable, as they have been proved to be. But I think at the end of the day, this is a business. NAFTA, all these trade agreements. This is something that you want to have something in place which ensures that both parties, or three parties here, are all happy with the way trade is done. So I think there will be, again, some kind of agreement. I do have a worry about Mexico, and I've said this before, and that's why I'm still bullish dollar peso, even though I think in the medium term the dollar will probably drop a little bit, and that's simply because the new president in Mexico is with this kind of leftist president who has announced all sorts of things, that he's going to tackle poverty and crime, and is going to do all these nice things. And I must say, it reminds me a lot of our prime minister when he got to power 3 years ago here in Greece. And he promised all these things and has delivered absolutely nothing. So whenever I see things like that, I get very nervous. And that's why out of the two, Canada and peso, I much prefer the Canadian dollar. So for that, I think the NAFTA, I mean, I'm no expert in the, North American economics, but I do think common sense says that there will be some kind of agreement where, Trump and his government will find something that's mutually acceptable. And so I do think that the Canadian dollar has, has a good potential to really outperform.
Right.
Especially given that I think oil is probably going to be supported. I've shown my chart for oil quite a few times. There's a big area between $60 and $70 where it's probably going to fluctuate, but in the medium term, I think it's going to keep going higher.
For those of you guys that are not looking, euro and pound are really starting to move higher. So it's really pretty strong moves are coming in. You can see the euro hitting new highs.
You have a 4-hour reversal candle to the upside in gold now working.
Oh yeah, let's take a look at precious metals.
Still lower on the day, but that could have been it.
Oh, I mean, look at the gold, the huge hammer on gold.
Wow.
Yeah, here's silver. After that flush out today.
Yeah.
I mean, the risks are starting to increase for a bounce here, and like I said, euro is hitting highs. It's the highest of the session. The U.S. dollar Turkish lira is turning over, as we were kind of looking at the risk of it turning lower here and really feeding into this dollar weakness. It's actually happening. So I am, again, I'm long the pound down here. I think the pound above 128 is where it really starts to get a little jiggy, if you will, and really a move above 128.50, and then it's going to look really really bullish. But I'm bullish these particular currencies at the moment because I think that the dollar is a little overdone. And speaking of the dollar, I guess we should go take a real quick look at the dollar index. The dollar index. Go ahead.
That data point.
What's that?
That one candle where it showed it traded 95.20.
Oh yeah, that was I'm not sure why that bad tick is in there. Yeah, I'm not sure why that is. I kind of look past that, and using TradingView here, they're probably going to make some adjustments by the end of the day. And it probably has more to do with like the ICE quote than anything, but they'll probably make some adjustments by the end of this session. So
I don't actually see any headlines coming through. So this euro move, this dollar move must be just it getting overextended over the last few trading sessions, right?
I think it is, and I think people are starting to believe that the lira might actually bounce here. Maybe there's going to be some good news regarding the pastor. Maybe the central bank is going to be raising rates. I mean, now Turkey's interest rates right now, correct me if I'm wrong, they're around 17%, aren't they?
I think so. I've lost count. Hold on, I'll try to find it. But yeah, they're probably.
The price of hashish in Turkey has exploded to the upside because of the currency devaluation.
17.75%.
Yeah. So here we are. So where are they going to raise rates to? 20%?
Argentina went 40.
It's possible, right?
Yeah. Or he could just release the pastor. It'd be cheaper. Maybe if the pastor promises or converts to Islam and becomes a mullah, he'll let him go.
That's funny. I actually was surprised today when Turkey, the central bank said they were going to deploy liquidity measures to defend the currency. It's like, you know, you have a particular amount, a specific amount of FX reserves and gold reserves. You use them up. It seems to be like the most pointless way of trying to support your currency. You know, they should really be raising rates. But you know, I don't know. I don't know what I would do in their place.
You'd let the pastor go.
Yeah, that's true.
That's all it would take. You get long euro, and you know, and you get long euro, and then you'd let the pastor go.
That'd be the cheapest way. Hey, you know, go ahead.
No, I was going to say the only problem is that, you know, Erdogan is all about the image he projects to his people, and he wouldn't want to show that he's losing, you know, in some way. So I don't know.
Take a quick look at the U.S. dollar, Japanese yen. We spiked down into the, you know, near 110, and there's the big 200-day moving average down here, and we have actually reversed course pretty aggressively in the U.S. dollar, Japanese yen, which you know, is obviously helping risk appetite. You know, you got NASDAQ futures are up, Russell futures are up right now. S&P futures are still down slightly, and so are Dow futures. But you know, this move, you know, back towards 111. I mean, it's going to increase a risk appetite, you know, and that's what we're seeing. So, but really big reversal in the U.S. dollar, Japanese yen as well. Hold on, let me turn down my speakers here. So. Anyway, Dale, I know you have a guest coming up. Is that correct?
Yes, sir. Yeah, Henrik's here too.
Okay, cool. Well, I'm going to flip it over to you, and we're going to try to reach out to Steve and figure out where the heck he went today, and see if he's going to be around this week, because I'm surprised he isn't here. But you know, if he's not going to be here this week, then we'll make preparations for it. But I flipped the charts back over to you. I want to wish you a great interview, and Stelios, thanks for being here with me today.
It's my pleasure, guys.
All right.
Stel, all right, Blake, good hunting today. Stel, give me a minute, maybe make one more comment, and I'll be ready for Henrik. Anything you want to close it with?
Yeah. Actually, following from the thing we talked about near the end with Blake about interest rates and inflation, you know, one of the big things that central banks look at, and pretty much everybody looks at, is the equity markets. And we've talked about this again in the past on these webinars, but ever since the lows in 2009, we've had a huge rally in global equities, US equities in particular, which was fueled by an economy which was obviously improving, that cannot be denied, but also we had ultra low rates, we had zero interest rates, very cheap money, and that encouraged risk taking. And you saw companies issue debt. Even companies, even like Apple, who sit on multi-billion, you know, piles of cash, they issue debt, and they take this money and they do the now infamous buybacks. And you have buybacks which have been going on for years and years. And I think I read the stat a couple of weeks back that this year's buybacks are going to be at all-time records. So this thing, for me, when I look at it, it doesn't make any sense to me. I mean, it does make sense because boards are being paid on an annual basis. So, you know, if your stock goes well, you get paid. But this is not a sign of a healthy stock market. And I've been saying it for some time that there should be some kind of correction. And maybe higher yields are going to be the trigger for that, because higher yields will then make it a little bit more expensive for companies to borrow. And then these buybacks will stop. And suddenly we're going to get proper price discovery and a bit more neutral prices at low levels. I think that's how it should go. Obviously, who knows how it's actually going to go? And like we've said many times, you know, markets can remain. How do they say it? Markets remain
irrational
for longer than you can remain solvent. That's it.
Yeah, that's it.
Yeah, there you go.
I've experienced that.
Oh yeah, me too. For sure.
What a learning experience, right?
Yeah, absolutely.
Anyway, I was in a fetal position for about, I don't know, 5-10 years. So thank you, Stel, and great working with you. And
Thanks, Dale.
Keep up the great work. And if you want to hear a bear, I've got a bear in the house. Henrik, how are you, buddy? I'm going to make you the presenter, and then you'll have volume and we'll be able to see your screen. Looking forward to talking to you again. It's been a while. Welcome to Face. So you'll see the drop prelude. Oh gosh, reminds me of Quaalude. Hi, Henrik. Let's see if you're unmuted.
Hello, Dale. Can you hear me?
Okay, I can now. Yes, Henrik.
Good. I don't know what just happened.
It's great. I lost your screen though. Let's see. Have your screen up there? Yeah, it said Prelude on it.
Yeah, it does. Yeah, it is. Yeah, that's my screen. Yeah.
Okay. I don't know why I'm not seeing it.
I'm not seeing it either. Let's.
Do the show screen again. There you go. Okay.
There we go.
Yeah, thank you, Henrik. Prelude. So, I understand that. I bet I know what the prelude is, but Henrik, I want to acknowledge you. You know, a lot of people have a hard time, especially on Twitter. They love to see people be wrong about things. They'll always comment about that. And then you notice at times how silent they become when the forecast that you made is spot on. And they were wrong. You ever notice that?
Oh yeah, I think all investors have tried that at some point. Yeah. So
yeah, it's a pretty selfish attitude. Anyway, you've been spot on bearish. I even remember seeing some of your tweets when we were threatening that upside breakout in gold at 1360, and some people were saying, "Well, you'll be right, Henrik, but it's got to go to 1500 first," and never broke out. You stuck by your guns with that in the euro. So congratulations on great forecasting of both the gold decline and the euro decline.
Thanks.
Yeah, nice work, buddy. So you also have a reputation that's really building. I announced that you were going to be with us today, and a couple of the members go, "Oh yeah, he's a perma bear."
No, really, I'm not. I'm not a perma bear. I think it's about timing.
Yeah, right. So right now, the last 2-3 months, it certainly has paid to be bearish, and I'm with you. I know longer term, you're looking for real important bottoms in gold, but where you want to back up the truck. But let's start looking at your charts. Also, I don't know where you want to start, but it looks like you've prepared something. So
yeah, let's do that.
Let's, as they say, what's the name of the guy? Something Cuomo has a show on CNN, and he lists the headlines that we talk about, and then he goes, "Let's get at it." Let's get at it, buddy.
All right. Okay. So when I hear people talking about trading and about how to, first of all, I want to say I'm not a day trader. I position myself for a certain in a certain direction, and then I watch it develop, and if I'm wrong, then I'm getting out of it or taking a new position. But actually, what I've done is I built a multi market model, which actually coincides all the different markets that needs to be in sync in order to understand what is the big picture, and that big picture actually starts way out from the chart. It actually starts with an understanding of where are we in the long-term cycles, because I also do some business cycle analysis, and that starts with some of the old theoretical guys with Kondratiev and others who have had, and that's actually what my prelude is about. So I'm just seeing.
Okay, so Kondratiev, who else is a favorite of yours?
But long term, I'm not doing more in the long term. I got a small Danish consultancy that is actually working a lot with this, that I'm communicating with on how to do this, and it's called Demetra, and they do some fantastic work on cycles, which has not been acknowledged by, I would say, internationally, probably because they are very Danish in their approach, but they do fantastic work on the cycles basis, I would say.
Okay, so autumn ended in 2000, so the last 18 years. Besides the financial crisis and the bubble popping in 2000, a lot of people think everything was fixed after what the Fed did, and
exactly
banks. So we're where in the winter? Is it midwinter? We're no longer.
As I see it, I mean, this is what is important to understand from the beginning, because if you understand where we are in the Kondratiev wave and the long-term cycles, we will understand whether we have a deflationary environment or we have an inflationary environment. And when I hear people talking about an inflationary environment, I really cannot see where that comes from. And that's why I stick to the deflationary outlook. I still see, and now these last couple of days has probably shown where that could come from. But we have seen during the 2008 crisis and the financial crisis, the prices dropped, consumer confidence dropped. We had high employment, but that was not all of it. We were not having all the checkpoints in when it came to the things that we need to see in a Kondratiev winter, and also the length of the winter was simply too short. So I was saying all along, guys, we're not through the winter yet. And hence, we need to see some, development in terms of trade war. So this one was actually not ticked off, a few months back with the trade war. Currency crisis, I just ticked that off. I mean, we pretty much have the evidence of that now. We will still see yields now. We have that at extreme low levels, but I think they will go even lower. I don't see the rates that we see. The hiking on the rates is in the short term end. It's not in the long end. And we will see extreme low levels of in the long end as well. And I don't buy that we have that the bear market in yields is over and done.
Let me ask you this. I did see a chart you showed on the bonds and your bullish projection. Are treasuries going to underperform the bonds, and that's one of the reasons why the dollar has a long way to go long term to the upside because of the rate differential, even though rates are coming down?
I think that the rate differential will be one thing, but I also think it'll be pure about liquidity. And there's only one true liquidity in the world, and that's the US dollar. We know that because that's where we buy all commodities and things are bought with US dollars. So there's only one real liquidity, and that is drying up at the moment, and that is deflationary, and that's why we're going to see some of the events that I have still unticked here. The pension fund crisis, I expect that also to be in the US and other places. Run from paper money to gold, yes, eventually, but we'll need to see gold correct, because as long as the winter is deflationary, gold will do poorly, and I have extreme low levels for the target for gold. And then hopefully not, I don't hope that we'll see war, but that is unfortunately also what we see during the Kondratiev winter. Last Kondratiev winter lasted from mid 30s to 29 to 49, around 49. So I mean, it's 25 years kind of period where things are in a deflationary mode, and these are the things that we're going to see during that. And if I have some respect for that and say, well, it has happened before, and why shouldn't it happen again? And instead of just trying to pinpoint identify the direction based on short-term movements, I mean, then probably I could be better off. I mean, I don't think we've gotten that much smarter over the years. So why not try to?
The bulls will say it's central banks, global central bank, QE, loose money that has could keep it going and avoid it. You're saying they're going to become impotent. I don't know if you've thought about this, but in 1937, which was 8 years into the last winter you're talking about, the Fed began to tighten. Just like they are now. And then it was the second half of the bear market from 37 that, like you said, we didn't come out till 49. That was well after the war ended.
Exactly. And when you look at it like that we feel like we've been going through the worst part of it, but actually I think that the worst part is ahead of us. Hopefully not because of war, because that will be really terrible.
How about debt?
Yeah, exactly. But you will see normally in a winter, by the end of the winter of Kondratiev, you will see that there's been some kind of debt jubilee, that the debt have been wiped away for some reason, that that debt levels have gone down. And if we look at it in 2009 and until today, we haven't seen that. We didn't see it in 2009. The debt levels went up, skyrocketed, and it's even higher today. I think it's like 350% of
only the banks got a jubilee.
Oh yeah, the banks did, yeah. But that's also how it starts. It normally goes through the financial system first, and then you have it on a sovereign basis. So it's nationwide later on. So this is what we're going to see now.
biblically, it used to happen every 40 years. They would draw the slate clean, and debtors would be unburdened, and they would start it would wring out all the excesses of debt and start over. So you think we will have a debt jubilee? Do you any idea what form that will come in? Default on U.S. Debt, because we are the biggest debtor nation?
I think first of all, we're going to see the test of that in other countries. I think that Japan or other places will go first, and also Italy and places will go first.
Okay.
But I think by what I'm forecasting is by 2025 or the like, we will have some sort of monetary reset, and that's the debt jubilee that I'm talking about. So it's some kind of reset of the monetary system, which will then somehow wipe out the I don't have any details on that, but again, I'm trying to paint up the big picture and then see how that works out with help me forecasting the markets.
Yeah, do the right thing today, and tomorrow takes care of itself, right?
Yeah.
All right. So next slide, Dixie.
Yeah. So then I have a few slides. These were made yesterday, so today's developments are really, but yeah, it's all kind of fresh. But
All right. So I know you're looking for a low in the 111 range in euros. So.
Oh yeah, but can I get back to that, because I had that just a little later here, because everything is driven by the dollar, and if you have a deflationary environment, you have a dollar that rallies, runs up a lot, rallies. And as I see it, my analysis points to a chart like this, where I've been pretty clear that we saw the low at 88.15 around there in 2000 and around was it January 5th? I can't remember now. But anyway, but this year, and now we're going to see the last leg up in this structure, which can end at around 107 to 109 for the DXY, or even at 119. And this is it's working out perfectly, and I can see the structures of this also, and that obviously means much lower euro levels and much lower dollar levels. So I'm seeing for this, and this works great. This model, you can also see the RSI is moving upwards on the monthly here, which is a strong signal. So I think what we're seeing now is a deflationary environment, and I'm also been tweeting that on Twitter, saying, okay, so what we'll have some kind of black swan event because the liquidity is drying up. We see that now with emerging markets, and we will have more of that, because that is, some kind of a self-propelling event that will take, take strength, and also driven by, the fact that, we will probably see the Fed hike one or two more times. So we will see a run-up of the dollar over the coming months, but I think it'll be rather short. I think it'll be.
How did you come up with your Feb 2019 date? What cycle is that? So you're projecting both price and time. How do you come up with Feb next year?
First of all, there is a 17-year cycle on the dollar, and that has either to be this year or last year. And as I didn't see it last year, I didn't think it was the top there. I'm predicting it's going to be this year. I mean, end this year or early next year. So I mean, it doesn't matter with 1 or 2 months. That's not that precise. So there's this 17-year cycle, and it's runs in this nice trend channel. And if you look at it, normally you would also see that a trend channel formed by wave 2 and wave 4 and wave 3 and 5, and it hits somewhere around end this year, beginning of 2019. So
you think so is that kind of the window for your gold bottom?
Yes, it'll come on the later, and that's where the multi-market kind of model comes in. So all the markets that I'm following is in sync with each other, so that I have similar time predictions on tops and bottoms and the like. So
bottom line, before you go to the next slide, basically with this kind of forecast, except for intermittent counter trend rallies, you want to be long the dollar and short the world, except for bonds. Bonds will thrive. Bonds are the only thing that'll thrive, and cash in this environment.
Exactly.
Okay.
And if you look at it here, you have cash, gold at a certain point, but you need to do it, the right time, and then bonds obviously also. So we're not done with the winter yet, and we have to position ourselves. But we have right now a spike in the dollar.
I'm getting shivers. because it's because it's summer here in Southern California. It's about 100 degrees, and you cooled it off. Just listening to you makes me want to go get my gloves and my earmuffs. I'm freezing now, man.
We just had a fantastic summer here in Denmark, so it was like 3 months of fantastic weather. So it was great.
Yeah. Okay.
Well, okay, so let's move on. So because I also do this on a shorter-term basis, but I'll say that the long-term models are the ones that I do the best. But what I see now is probably a run from the DXY up till around 97, 88. I don't want to be too precise here, but that's a 61.8 Fibonacci retracement would be normal. And I see some kind of count, like with the small red count there going up to around that level before we have probably a 50% retracement, which will take it down around 92, 93-ish area. But that will be the moment to get in the dollar, because that's when we see the next thrust upwards, and that's going to be really strong.
Okay, I like it.
So that's the dollar, and obviously the dollar, as I said, is the liquidity of the world. So that's what's going to drive everything around us. So what is it going to do with the euro forecast? And I've had this model, which is also in sync with as I said, with my dollar and the rest of the markets. And as I see it long term, we'll see 0.9 for the euro. I even have a bet going with Nordea in the Nordics, back in the Nordics, on how low we're going to go. But I think a retest of the 2001 lows is in the cards. And if you look at this chart, it is a typical topping pattern. If you look at without the elevated waves counts, it's a topping pattern, which is everything above the black line. When we cross through that in, I think it was 2014, we break that, the topping. So the topping pattern is in. Then we have a sound or a healthy retest of the break, and then we're going down to the target. Which is
you have a measured move with that vertical black line to that
exactly.
area.
So that tells us it's 0. And also, if you look at it normally, if you have an A, B, C development you will normally see that the C development is either 100% or 161% of the A development of the price. So if you look at the distance from the first black line on the top to A, that's 100, as it says in blue. And then if you take that from the top of B and down to then it gives you exactly the same point. So I'm saying 0.9, and we're in a nice trend line that also points to this, and we have a huge support area in 2001. 0.9 is my long-term target.
Okay, very clear. With an intermittent rally, you're expecting from 111-ish. I have this on the daily here. Yeah, it's correct. I'm seeing this drop continue to around the 111 again. Reason being, I didn't put that in here to see, but I think it's also a 61 for. I can't remember why I got that, but it's a crucial and very important area, the 118 area, and also and then I see a strong rally up. Normally, wave twos are based on rumors, so I'm guessing here, but let's see in the next couple of days, because I think it'll be this week or latest next week we'll see the bottom. That some kind of fix.
Intervention by a fix of some sort, but it will not fix the real underlying problem, which is the drying up of the liquidity of the US dollars. So it'll rally up, and investors will get real excited, and move into and gold will be moving alongside with it upwards, but it's really just a wave two, and it's going to catch all the bulls on the wrong foot here. So I will probably be trying to see if I can get long there, but I'll rather play it by going short at around 118.6, around that area. It can even move to 120, but I don't think it's going to go that high, because I see a lot of support around 118. So that's where I'm thinking going very, very short the euro.
Okay.
And also the dollar. Also the gold.
Okay. Okay. So counter trend moves coming. Mid-month,
Yeah, because if we look at it, we know we've had the first move down, and this is we have a 1, 2, 3, 4, 5 development in with the white brackets, and that's the Elliott wave count, and very often a triangle development, as we had from May till July, is a wave 4, which it is also here. So I'm thinking there is some kind of, you know, and also we passed right through the whole 118 area, which has huge support back in September. I think it calls for a retest of that area. So okay. 118, yeah.
Nice look.
Yeah, okay. But then that's only, you know, an opportunity to go short.
How much of a recovery do you expect in gold? Maybe back to 1280, 1300?
First of all, I'm gonna, you know, let me just take you right there then. So if you look at that, this is what I'm expecting, yeah. So if you draw line between the B and the D, you'll have another very thin line there, and that it gives you exactly the kind of retracement that I'm looking for. So kind of a, I think it's a 50% retracement back to 1290 or the like. That's around that area, and then I'm expecting minimum 825 by Q1 2019, but it could go as low as 750, even 730 or something like that. And that will correspond with a huge mega picture that I got, because what I'm actually seeing here on the monthly for gold is that this whole correction, let me just back up one more point here, because where we at, if you look at the theoretical wave count, we had 5 waves down, then we had a bounce in the middle, and we are now in wave 1, and we need 2, 3, 4, 5 before getting to where we're supposed to be. If we look at that in the big picture, 1, 2, 3, 4, 5, this is A. Then we have an A, B, and C even had the 5, you know,
right.
And then we're going down. We're going down with 5 waves. But what that does also is that creates a huge bull flag for us. So when we get to that point, that's when you talked about, you know, loading up the truck and then getting really, really long. But for now, the right play is short, and it's going to frustrate a lot of, even especially when we get the bounce in wave 2. What Elliott Wave also tells us is that normally an retracement like an ABC like this, we will see that the C development is either 61, 100 or 161% of wave A length, and I have it out here. So that would bring us down to the 825, which is my minimum target. It also tells us it will bring us back to the old area of the former wave 4, which is down here. So what I'm seeing is that we're getting down to this area, creating a huge bull flag, which will set us up for the last part of the winter, in Kondratjev's winter, which will shoot gold, you know, much higher. So I'm expecting a minimum 5,000, but it could be 7, 8, 10,000, 12,000. I mean, it can go much higher. Yeah. But that's also, if you look at all the money that's been printed and all the stories and the narratives that go around gold, they're just being too early on that. Because for now, it's deflationary, liquidity is drying up, gold is going down, and that's what I'm expecting. So
there's a little difference between the February cycle I think you had in.
Oh yeah, but it could be February, March.
So basically the same quarter is going to happen. Got it. Yeah. Okay, Henrik.
It can even be December. I mean, it's sorry.
It could be the end of the year. How about the something no one can call right now? Do you have a view on stock indexes?
Yeah, but that's where I've been consistently wrong. But let me give me just silver here. I'm expecting. I just heard something about silver, but I'm expecting retest of 2008. So 884. Yeah. Wow. This is a huge. I mean, it's breaking down here. And you have the same kind of structure, and you'll see a development down to. And if you put it into an exponential logarithmic scale, you'll actually see that it's around here. That's where we need to find the support, because liquidity is drying up. Silver and gold and precious metal will be, and that's why I'm short miners, and I've been that for quite some time, expecting this development in wave C to develop faster, but it's coming now as I see it. So that's silver, and I got VTI, which is also very bearish, as you probably know.
Yeah, I saw that one too. That's going to really surprise people.
Yeah, but
that's going to surprise people, but that goes into the deflationary cycle, exactly. And that economies are going to weaken into the end of the winter, and demand will drop.
Exactly. We're going, and we are actually starting to see some of the leading indicators that the U.S. is starting to slow.
What if the Iranians shut down the Straits of Hormuz?
Well, I mean, I can still see a spike up to 79. I wouldn't like it necessarily because I'm short already, maybe a little too early. But I'm not getting out of that because I do expect to see. But if they do that, of course, it could create some short-term spike. I'm not an event-driven guy. I'm looking for the big structures. So the structures to me tells me that it's going down. The dollars will strengthen, and gold will, oil will drop as well. So 20 below the 2016 bottom at least.
Okay, and then it'll go to 100.
Yeah, and then it will go up at least. Yeah, because what I'm expecting to happen is that when the dollar is going to increase as much as we talked about, then of course the Fed will have to reverse. They will have to start adding liquidity to the world, and that will shoot off gold and everything else. Actually, I expect us to see a stagflation at that point, not now as people have been talking about, but at that point when the Fed really falls behind the curve because inflation expectation starts to build up on a more secular basis. But for now, they are not behind the curve. They are actually in front of the curve, and they are controlling inflation as we see it. I know it's been moving up, but it's still within there. I think at one point they will have to put liquidity into the world that they do not like to do because it will create high inflation
and kill
the dollar. Yes, exactly.
Yeah. So. Okay. So a pretty good coverage. Oh, here you go. I'm interested in it. This has been tough for everyone, man.
And especially me, because I've been bearish, and I just simply couldn't see. But maybe it's because I'm not experienced enough. But I couldn't see how these valuations could keep climbing up and up and up. But again, my play here, or my understanding is that we will see some sort of deflationary development in this. And as I've been thinking about it, I actually think when you look at this chart that you have what could be a meaningful top. We'll probably have what can be a new high, or it can be just a new, just a marginal high, or it could actually drop from here. And some of the developments we're seeing now could probably be the trigger of that. But let's see. But I think the first wave down, which will be an ABC correction, is going to be some sort of deflationary development. So I would be expecting over the coming, the second half of this year, that we will see money running out of equities and out of everything except of bonds. Bonds will be, and TLT will be rallying a lot, and the dollar, and then we'll see some sort of, some sort of Fed intervention, which will create the wave B that I'm predicting into next year. But eventually, and then it could be an inflationary takeover, but inflationary development after that, as the Fed falls behind the curve that drives the equities down.
Okay. I wanted to ask you, did you have any other markets you wanted to cover?
Well,
DAX. Go back to that last one. Yeah.
This is the DAX forecast. I really think we have some bad developments coming in Europe, and I cannot see.
Yeah. Last time it was the U.S. that was ground zero with the mortgage crisis. This time, do you think it's Europe that's ground zero for what's going to happen?
Yeah, I do. I think that the euro has been misconstructed. I actually had the opportunity to talk to one of the guys who's sitting close to one of the founders of the euro, the creators of the euro. I don't want to mention names here, but and he said that they knew from early on that the euro was misconstructed, and that is coming up right now as we see all these adverse shocks coming to Europe, where Italy is, having a lot of problems, where we in Denmark, we do not have the same kind of debt. We actually have control of our finances. So you will see things, unravel to a certain, and it can also be a refugee crisis. It can be many things driving this. But what you see technically is, on a very long-term perspective, that things has been running, the equity market has been running up, but momentum behind that has been, declining. So I think this is a big one for Europe, and Turkey can be the first trigger. If you look at Deutsche Bank, which I've also been covering quite a lot, it's not solved, and we have the whole Italian bank sector. I think I actually have some, but you have 25 banks that are more or less insolvent in Italy. So who are going to cough that money up when it comes to
and then I read that Spain owns more of Turkish debt or Turkish paper than any of the other banks in Europe.
Yeah.
Okay, so the IBEX is probably pretty negative too. In fact, it hasn't been rallying at all. Okay. Anything else you wanted to show? Because I'm curious.
But then I have. Sorry, go on, Jim.
No, go ahead. GDX. Let's see it.
Yeah, I have some GDX because this is one of my plays that I want to go that I'm focusing on. So I'm also seeing a very new lows in GDX. I'm short the miners now, and again I see this inflation bound going in A, B, and C, and then I expect this to drop. We will have some kind of rally.
Cut in half.
Oh yeah. But that again will be a tremendous opportunity for everybody. I mean, this is where you want to go wrong with everything you got.
Okay.
Because when inflation starts to maybe run a little too hot, I'm not calling it hyperinflation or anything, but just a little too hot, then gold will do really well. And then I had, I had one thing that I want, because this is my inflation gauge that I'm using for actually to see where do I think things are going. And if you look at it, that's the Australian dollar, Aussie US dollar. And if you look at this kind of pattern, again, we have the drop here, which I see as the A. We have then the B up here. And then if you look at the 161% development, and you have this kind of pattern, which is a bear flag, and we have the breakout here, I could see us retesting, as I also see in many other markets, the 2000 lows, 2001 lows, or whenever this is. It's around 2001, yeah. So I'm expecting a lot, and this is the inflation gauge for me. This is how I measure, and this is how we're going to. So this has been a bounce in inflation that we have seen, but the second part of the decline in this quadratic winter is still ahead of us, and that's what we're going to see.
And this is also a China proxy, isn't it?
Oh yeah. Also China proxy, but China will be also driving a lot of the deflationary developments that we're going to see.
Okay. Are you advising people now? Do you have a business model? No, go ahead. Go back to what you were going to say.
No, just some appendix I had it put in, because I was just have a lot of the slides here that I like to show people when I'm doing this.
What a great presentation.
Thanks.
Maybe you could email that to me. Oh, you know what? I'll have the video, and so will everyone else.
Yeah.
So are you doing anything? Have you developed a website? People running to you, offering you millions of dollars to trade because you've been so hot?
No, I've got a lot of people coming to me now. Yeah, the last couple of months since and since the euro started to drop, and I am advising some people, and I am also mentoring some people. I like to mentor people how to look at these things rather than maybe doing the trading for them, because what I kind of see is people have this very short term, even though they say they're not day traders or swing traders, they turn out to be, because they sit and look at the graphs all the time. And I think it's maybe when I have the right people, then I can help them do the long term positioning, and I do that for quite a lot of people also. But you're doing day trading, then this kind of tool is not the right thing to do. I mean, there are other tools that are better than this.
All right. So what's the best way for people to contact you? Through Twitter?
Yes, please contact me through Twitter. I will be, I am having some, clients or people that I'm advising, and I of course I take a fee for that. But let's see what can be done. I don't have specific services that I do. I try to assist people in the way that they would like me to do, as long as it's not day trading.
Okay. Thank you so much, my trading warrior brother and friend. You said you were gonna you look at me as a friend, because that's what you said on Twitter. So all right, you're my friend and trading warrior brother, and the biggest bear I know. And you've been on target, and you're not a perma bear, because you even look, you talked about we have some counter trend stuff developing from lower levels in the euro and bounce in gold, but the big money's still to be made on the short side of almost everything except bonds. And what a great picture you painted. It's going to be tough. What about crypto? Any view on crypto during this winter? What's going to happen? Is it going to go away? Will it end up attracting a lot of money because of, or will that have to wait until the death of the dollar?
I'm not a big crypto fan, because I don't think we've seen the final solution to it, but I'm not an expert in this field. But what I'm seeing is that when the, what do we call that, the craziness of Federal Reserve, of the Fed and the central banks will explode when they become too scared of the deflationary development that we're going is going to take hold. We will see, as long as liquidity is drying up, crypto will do bad. But at that moment, I think we can go a lot, very much higher in Bitcoins and other cryptos. So I'm actually, even though I do not understand it really, crypto, I think I will take a position when we get down to, if we get down to 2,500 or so US dollars for Bitcoin. And I can think, I don't even, I'm expecting, the upside, if I look at it from technical perspective, to be so absurd that, just putting a small position.
Yeah. I'm
500,000 for the Bitcoin.
Oh my goodness.
Yeah, it's crazy. So that's why it sounds ridiculous, and that's why I don't know. But it's if you look at the numbers, I think that was what I think it could get up to. And probably I'm mistaken.
You know how to purchase it and put it in a wallet that isn't made out of leather?
Oh yeah, there are some apps and things that
you know how to do that?
Yeah, yeah.
All right, maybe it could help me, because the only wallet I know how to use is the one that I'm always asking my wife for. Honey, where's my wallet? Where's my wallet, honey? Anyway.
Where you left it, Dale.
Yeah. Well, Henrik, God, it's I really appreciate you coming on, and some great macro views, and I think that you're a great follow, and I there's some great trading opportunities both ways in the next few years, aren't there?
Oh yeah.
I kind of like if your trading life has been in a drought, there are lots of rainmaker trades coming up.
Oh yeah, definitely. Just having the right, amount of patience is probably what's going to help. And I think next month.
It's always being tested. It's always being tested, isn't it?
Always.
Yeah.
But thank you for having me on. Dale.
You're welcome, Henrik.
Thank you very much.
All right, man. Thanks so much for sharing your great stuff. Adios.
Adios.
All right, that's Henrik. You could follow him at Henrik Zeberg. That's HenDRIKZEBERG. And I'll see everyone for Turnaround Tuesday. Good hunting, and most of all, don't just count your pips, count your blessings, and I'll see you tomorrow. Thanks again, buddy.
Thanks.